Good to go. Mic check, mic check. What's going on? It's Nick. Just doing a daily video. Let y'all know what I'm looking at. These are the same order blocks that we've had marked out for about really like the past week. I mean, these order blocks have been here for a minute. You can see again, we wicked up here into this 4-hour order block, bearish order block. At this point, you've had 1, 2, 3 opportunities to short this order block, and that's usually how it happens. You can see something very similar happened over here where we didn't get 3, but we reached for it, and then we hit it again, and then we hit it again. Very similar setup. Markets generally give you multiple times to short a market or to long an area of market structure, excuse me. So I don't understand people who say waiting for confirmation is bad, because I mean, let's say you have a bearish confirmation here and you're like, oh yeah, I see divs, I don't like this at all. You can short up here, you can short here, and if you're not convinced until you get over here, market still gave you an opportunity to get in on a short. So I mean, it's just kind of how it happens. We're still inside this daily bearish order block, and if you switch to the daily view, these red lines represent the body of this candle, of this bearish order block. We have not been able to close inside here at all. It's just price will not close inside where the body that forms this bearish order block is being formed. That is significant. Lets us know bears are heavily defending this level. These are some intraday order blocks I've marked out. I don't know what time frames. Maybe this is the 4-hour. This is definitely a 4-hour order block, excuse me. And this is somewhat like a 4-hour order block. I basically just took the wick and then like the base of these two candles right here. You can actually see it's dumping a little bit, or at least getting a little bit of a reaction as we approach the bottom of the daily order block. We'll see what happens here. That being said, actually, now that we're approaching that, let's look at some of these divs I have marked out. Some of these have already kind of played out. So again, important to note that oscillators are by default calculated using the closing values of the time interval, whatever time interval you're looking at for price. So you don't need to use the wicks. That's why often when I'm looking at divs, I just go to the line and I just want to look at the close of the candle, and I just look at the line. That's how I do my divs. So definitely some higher highs here while making lower lows or lower highs on the oscillators. Let's see. I had this line marked out because I'm looking at a possible bullish divergence that might happen. Now, if price crashes and breaks through this order block right here, then this div won't be a div. It won't matter. But if price stalls right here, then that'll definitely be a div on the stochastic RSI, and it'll probably end up being a div here on the B band %B, and probably RSI as well. So that'll be something to look out for. We won't really be able to see any divergences on the awesome oscillator from this time frame. You probably have to go to the 1 hour, and even then you're probably not going to see it. Other things that we want to look at, a couple trend lines. There's 2 forms of looking at trend lines that I want to focus on. So one is this fork that's happening right here, where we had this trend line and then it broke off and ended up forming that trend line, which we're starting to approach now. You can see we had a break here and then a retest of what was support as resistance here before establishing, oh, sorry, hit my mic, before establishing a new trend. And you can see we touched it once here, we touched it once here, and now it looks like we're about to come back and interact with it again. This touch right here will tell us a lot. If this holds, then it's like, okay, we have a support trend line that's held 3 times. I don't even want to say, maybe we should give it more credit. It's still trash. The volume on this is still horrible. You still have this declining volume as price increases. So, I don't know. It would just mean like maybe we'll get another chance to short somewhere up here if we bounce right here. But I'm reasonably confident with high probability and low risk that this trend line will break. We could totally bounce up from here and go straight to 8K, like just straight up moon, but that's just low probability. I think we break this trend line first. We reach down here, grab demand, or we reach down here and grab demand, or we just break straight through these blocks. But I think we do have to come down this area and do something. I have a hard time believing this is the trend line that we sustain. Cool. Other things to look at, or the other ways to look at this trend line are this, and then here. Let's see, I don't like how it's drawn. I'm trying to get as many of the wicks as possible. That's really how I like to draw patterns. I like to get as many touches as possible using the wicks. So definitely something like this is how I draw the upper trend line. And then the lower trend line is about as tight as you can get. You see we had a good break of this wedge here. You see price or volume validates this pattern. With rising wedges, you want to see a declining volume profile, which clearly we see right here. Targets, people take targets differently. You may want to take like a 50% retracement of the bottom to the top of the wedge, which would mean we're right in line with this order block here. So I like that. It's great confluence, 50% retracement with an order block that we've already, marked out. You can see even if you extend this block to the left, it provided some support over in this area. So this would be a great target to go long if you felt bullish. Another way to grab targets would be to take kind of like the base, the largest part of the wedge here, and then apply that to the breakout point, which would have us breaking this order block. Now, the interesting thing about taking targets this way is that this is a minimum. This means that ideally, if a wedge performs the way that we imagine it to, we at least touch here, which is about 6.15. That doesn't mean that we stop here. We could go straight to 0 and we still hit our target of 6.15. So that's what I mean when I say this is a minimum. Let's see if I can draw this any better. I think this is a better way of drawing it. Basically where this top part is right here to where this bottom is. And then if you apply that at the breakdown, that actually, again, great confluence with that order block. So I'm just going to go ahead and actually just call tops on this whole market structure. I don't think we blast through here. And so if I do call tops, And I draw this fib. The high of this candle is 68.68. And if I do that, then I mean, I'm looking at taking targets here at about 6305.5. So if I was being smart with like risk management, I'm going to take some profits. Let's see. I'll take some profits here. Oops, that's totally the wrong tool. Take some profits here. Take some profits here. And then keep the rest and just keep my stop tight in case we just dump all the way down. And if we continue breaking order blocks, especially if we break this one, then I might even want to like add to my short on a retrace up here. So that's how you will look at that. You would have been short from somewhere up here near this order block with a stop above, I mean, either the 4-hour or the daily one would have worked, depending on how tight you want to keep it. Above the daily one would have been advised, because if we get up here, if we break up above 6.9, then you know for a fact you were wrong. Whereas we could have played around up in this level, up in like this area right here, and we could have still dumped. So, oops. So a stop up here makes sense, and we're definitely looking for targets here. And we're looking for targets here. Ultimately, it's our final target, but we'll probably take some profits on short positions right here. And this is the high probability setup. You can totally go long if you want to. You can buy the top right here. I don't care. But that's the low probability setup. And that's just how it works. I'm trying to think. Whatever's going to happen is going to be a very vicious move, purely because we've had this low volume for quite a number of days. Actually, let's go to the daily view. We've had this low volume for quite a number of days. Pretty much all this volume, except for these 2 days, have been under the moving average. But even when these two days of volume were above the moving average, we got these long wicks in both directions and price barely moved. Very tight consolidation range. So a lot of low volatility, a lot of high intraday volatility. But if you're looking at just the closes of the candle, it's been trash. And so periods of consolidation or low volatility are then followed by periods of high volatility. So what we're looking for, and maybe Bollinger Bands will let us know approximately when, but we're going to look for a squeeze. The 12-hour B bands are starting to squeeze. The 6-hour squeezed here, and we ended up pumping. The 4-hour is starting to squeeze again a little bit, so it really just depends. We are going to expect some level of high volatility soon, right? So if you're unsure, have your stop set. Be careful. Don't try and predict the market. Like I can erase all this. I can create a bullish scenario for you, totally. I tweeted this. I said, technical analysis is literally just like telling a story. You can create a bullish or bearish narrative for literally any set of circumstances. It's about picking the narrative that makes the most sense. Right here in the short term, this is clearly a rising wedge with declining volume, approaching a bearish order block. The short and bearish story makes way more sense. We just haven't seen the bullish volume. Looking at volume profile, again, point of control is right here. Met it, consolidate a little bit, dump. There's a high volume node here, so we might actually catch support maybe around 6.573. That would be a great place to pay attention to. Then there's another high volume node around where this order block is. And then this order block is, it's not really a high volume node, but it's right over a low volume node. So that will also be support. And then this area would also be support. So the story of volume doesn't tell you to buy here. It tells you to sell. So that's pretty much all it is. Just want to give a quick update. I guess the only other thing that might be interesting would be the guppy, which again is providing support around 625. So going long here again makes sense based off the volume profile and the guppy. I would be more partial trying to catch a wick right here than trying to go long here. Just for me. The daily guppy, again, we're over the fast EMAs. We're still under a lot of the slower EMAs. This is not a great time to buy. Guppy does not say buy. Guppy wants you to wait until we are above the slower EMAs, retrace down into them, and then buy. And then as we expand, that'll be the move that you want to ride up. I do think eventually we're going to get up here to about, where is it? I think eventually we're going to get up here to about, what's it called? 7.9K. I think that just makes too much sense. Yeah. I think we make a lower high here. I think we trap a lot of bulls because what that'll do is it'll break this high. And everybody will notice that we broke that high and everybody will start buying. And we're going to end up getting caught right here in the area of resistance we never really tested. It was support, never tested as resistance. There's probably a lot of supply right here. We're going to come up here and then probably make a lower high right here. So that's my theory. Very premature to even call that, but I think this 7.9, really the 7.8, 7.9 range makes a lot of sense to me. And actually, the last thing, for the last thing I want to show you are these EMAs, the 12 and 26, great EMAs. Broke above them, looking like we're going to come down. Again, another confluence saying about 6.5. 6 is where you want to go long. And if this is true, we'll probably catch a wick right here to go long here on the daily time frame. I thought that was important because, again, we're over the daily 12 and 26 EMAs. For the 4 hour, we're currently breaking them. So if you're bearish, or at least we're at the bottom of them, the 26 is actually holding up very well. You can see it's right over price, or right under price, excuse me, by like $1.20. So if you want to be conservative, then you're really not confident in this break. You want to wait for these EMAs for a clear break on high volume and trying to retrace up around to where these EMAs are. And on the 1 hour, we've definitely broken them. So maybe you want to be short from around 6.684, 6.695, and try and catch a retrace up here. So that's how you would look at those. That's what I'm looking at. That's pretty much all I have. So catch y'all later.